One of our favorites, one of the stocks we are owning, one of the stocks we own personally, and we've got in the hot stocks portfolio, that's Bidvest. So it's one of South Africa's sort of success stories. It's an industrial and motoring and services giant conglomerate, I guess you'd call it. Right at the helm, of course, is Brian Joffe, who's been associated with the group since inception, bolting on, buying, allocating capital, monitoring and trading, making sure that the guys have the management teams in place. Quite an impressive operation across the board. Operating in Europe, in Asia, in Africa, of course, and probably a couple of other places, but those are the big three. Market capitalization above 100 billion rand. That was an exciting benchmark they went through some year ago. 106.3 billion. Dividend yield 2.7. Price to earnings ratio 17.84. Rowan, we talk about this company often. What are the big parts of the business and what's going to drive it forward in relation to its earnings growth going ahead?
Yeah, so this is interesting because it's sort of a good indication of what's happening in corporate South Africa. It's a bellwether stock. It covers a broad range of sectors. What they've been doing very well is expanding offshore, as you mentioned, those food services businesses in those jurisdictions, Australasia, Europe, including the UK, in the Middle East as well, and then in South Africa. And they really have been growing there, and that's the exciting part of the business. If you look at their most recent trading update, South African trading conditions very constrained, limited demand, competitive, and really the exciting growth area continues to be that offshore food services businesses. They've grown very strongly by acquisition. I think they've identified very key players in those various jurisdictions and growing and being able to sort of use that as a platform for additional growth. One of the areas you could say is missing, I guess, is North America, but that has its own dynamics, a very different operation, very competitive. I think they're sticking to areas where they feel confident with, and they're doing very well there.
Yeah, because if you bought businesses in Europe, like in Central Europe, Belgium, Netherlands, as well as Southern Europe, as they have in Italy, where they buy out these sort of family-owned transport, logistics and food services business, then you're going to benefit from the recovery in economic sentiment and the picking up of retail sales that's happening there. Whereas America, which has been growing strongly for a while and is intensely competitive already, you might argue, well, there's not going to be that many great buying opportunities in that market.
Yeah, and I think you say that Europe is more opportunity in terms of consolidation, maybe less so in the US.
Okay, what about the Adcock deal? Because we must bring it up because it's fairly significant. What do you think is going to happen there? Are they going to buy out the whole of the Adcock? And if they do, will they be able to manage a manufacturing business as well as they've been able to manage services businesses?
I think what you've seen is there was a mandatory offer. They only picked up a small percentage. They're up to 37% now. So at least for the next 6 months, nothing's going to happen. I think they would have ambitions to take the whole thing out. I mean, that was, I guess, an initial intention. It seems that the shareholders feel Adcock's very depressed and they want to see it really fulfill its potential before they'd be prepared to sell at any reasonable price. I think they'll do a good job if you look at the acquisitions that they've made, and there's a services element, I guess, logistics an element of that business. There's a lot of spare capacity in the manufacturing in Adcock. I think they can grow that, grow the brands and really extract returns from that investment. They did pay a lot more than the current share price, so they really have an incentive, obviously, to grow it.
Okay, but we're not going to worry too much about that because that's sort of work in progress. They have put new management in place, Kevin Wakeford from the group. On the subject of management, a couple of years ago, for some reason, people made a lot of noise about how Brian Joffe was approaching retirement. Then he said, no, I'm not approaching retirement. I'm here and I'm having a fancy time and I'm going to keep going. But is that an issue? I mean, he is in his mid-60s. That's not particularly old in current day standards. Can he continue for a long time? Is it a problem if he were no longer to be involved? Is there a deep bench here with Bidvest?
I think there is a deep bench, but look, to some extent the market equates Bidvest to Brian Joffe, and I think he needs to sort of address that, the board, in terms of a process of succession. They've got a very strong management team in each of the underlying divisions. The individual that runs a food services business is very strong, and I think he is a potential successor.
What's his name?
Bernard, I can't quite remember the name, but
and then there's David Cleesby, who I think is like the CFO type of guy, who's a potential lieutenant as well. He's a good few years younger.
Yeah, so he's although I think he's very much a finance man, I think they would
okay.
look to bring an operator in from one of those underlying divisions to run the group.
Okay, so we like this one. We've added to it in our portfolio. At the current level, I don't even see. Where's the share price? Oh, there it is. Probably had it up before while I was yammering on. So it looks okay. I mean, it's been recovering with the rest of the market. Is it poised to go higher in your opinion? You hot on it?
I am. I think, it's in terms of the Rand hedge element, that's really the exciting thing. If you look at the update, the read-through was those international food services were going to deliver strong returns. I think that will more than offset, slower growth in the South African space.
Okay, so we're hot on that one.